On today's episode, we are going to take a look at two giants that just reported earnings, and it is crazy how much growth they're still seeing. For both these companies, we're going to take a look at how their earnings did, we're going to take a look at technicals, future growth, and my overall thoughts on the business. So let's get started. Before we go any further, make sure to subscribe, don't forget to hit the thumbs up, and get your free stock on Webull. The link is down below. The first giant we're going to take a look at is Alphabet. This is ticker GOOGL or GOOG, depends on which one you want to invest, also known as Google. After hours, the stock is up about 8% after reporting earnings and is sitting at about $2,063. This is insane. And if this is your first time here, Google, I'm super excited because Google is a tier 1 stock for me for 2020. So I have a nice position in this company. But right now, the company has a market cap of about $1.3 billion. Now, after this up, it's probably going to be closer to 1.4, 1.5. So earnings must have been really good for the stock price to jump up this much after hours. So now let's take a quick look at Alphabet's press release. First, they say that their strong fourth quarter performance with revenue of about $57 billion was driven mainly by search and YouTube. They are also now reporting in 3 segments: Google Services, Google Cloud, and other bets. For those that don't know, Google Services include products and services such as ads, Android, Chrome, hardware, Google Maps, Google Play, Search, and YouTube. Then you have Google Cloud, which includes Google's infrastructure and data analytics platform, collaboration tools, and other services for enterprise customers. Finally, you have other bets, which is a combination of multiple operating segments that are not individualized, materialized. And here you have like Waymo, which is Google's automated drive. And Google has a lot of different small businesses that they own that they believe might be the future. So they're investing in them right now. So now if we take a look at the full quarter 4, we can see Google, out of this $57 billion of revenue, most of it is coming from Google Services, close to 53. About $4 billion comes from Google Cloud, and barely no revenue comes from other bets. But this is expected, right? Other bets, like we saw, is just future research and development companies. And for the full year of 2020, Google Services, again, made up more than 90% of total revenue. This is mainly ads. So ads is the big driving force for Google, making about $169 billion for the full year compared to the total revenue of $182. Google Cloud comes in at second, coming in at $13 billion. And I think this was the first time that Google actually showed how much money they make from Google Cloud. Unfortunately, they do not make any money from Google Cloud right now. Google Cloud is still a negative platform for them. For the full year of 2020, they actually lost about $5.6 billion in the clouding market. And this is kind of crazy, right? Because we see operating income for a company like Amazon, AWS. They just reported great returns, and their operating income from AWS is positive, and it's one of their biggest driving forces. So to me, it's kind of crazy seeing that Google still is negative in this segment. But remember, AWS is also the leader in the clouding market. It is number 1. I think number 2 is Microsoft, and I believe number 3 is Google. And we can see Google Services makes up most of this company's operating income and what really drives Google to go and have money to try new things. I also want to do a closer breakdown of Google Services. Remember, Google Services include Google Search Ads, YouTube Ads, other networks, and Google Other. And Google Others is the hardware like the Fitbits, the smart homes. Out of the $52 billion or close to $53 billion of Google Services, most of it comes from Google advertisement, about $46 billion. Most of it comes from the Google search. But we can see an increase in YouTube ads. YouTube ads this year were about $6.9 billion compared to the same time last year were about 4.7. So obviously we're probably getting more ads here on YouTube, and hopefully you guys get a YouTube ad at this moment, because that's obviously perfect timing. We're seeing a growth in all their services from Google Services, Google Cloud, and other bets. Normally, I do take a quick look at balance sheets when looking at companies, but Google, this giant, there's no real point. Total cash is about $137 billion of cash right now, and long-term debt of about $14 billion. Their total liabilities is about $97 billion. So this company has plenty of cash to pay off all the liabilities that they have. So overall, Google's revenue increased about 23% compared to same time last year, compared to 2019 when it grew about 17%. So we're seeing strong growth. They have higher operating margins as well. Margins this year were about 28% compared to same time last year being 20%. So now let's take a quick look at technicals. I feel like certain investors don't like getting into some of these big giants because they believe these big giants have already reached their cap, but we're seeing it has not been the case. In the past 6 months, the company has returned about 30%. This is a $1 trillion company giving those type of returns. Technicals right now, it is a bit overextended coming into earnings, and now sitting over $2,000 price is definitely going to be a little bit more overextended than it was already. But we can see Google has been giving us a great time since November of 2020, since its recent earnings. It hasn't moved much. It kind of gapped up, very similar how it did today. And maybe we might see the same thing where it gapped up and then it just sits there for about a quarter. And then before earnings, it started to pull back up. And now it has gapped up again to that 2000 level prices. So I have to take a look. Right now, Google, in my opinion, strong earnings, strong results, still a tier 1 stock in my portfolio. Right now, I'm not planning on adding into it just because it already has a nice exposure in my portfolio. But let's say I did not have exposure to Google, how would I play it? Because it is a bit overextended, I wouldn't go with a full position. And again, this is just my style. If it's a bit overextended, I enter with a smaller position and see how things react later on. As the second giant we're going to take a look at is Amazon, and this is ticker AMZN. It's currently sitting at about $3,380 with a market cap of about $1.7 trillion. And if you guys want to learn how to be a better investor, make sure to check out my Patreon where I drop weekly educational videos. So Amazon did have crazy earnings, and it's honestly shocking that the stock price hasn't moved up. There has also been other news that Amazon now has a new CEO. Well, it's going to transition to a new CEO. Jeff Bezos is stepping down in Q3 of 2021. And I did do a video previously about this, so make sure to check that out if you guys want to learn more about that. I'm not going to cover it too much here. But in the past year, Amazon has done amazing returns to investors, about 70%. And remember, we're talking about another $1 trillion company. In the past 6 months, Amazon has been kind of flat, and it's only up about 8.62%. So let's take a closer look at these earnings. So for the fourth quarter of 2020, net sales increased 44% to $125.6 billion in the fourth quarter. This is insane compared to $87.4 billion a year ago. And one thing we are going to see, we're going to take a look at the future guidance for Q1 of 2021. And a lot of people are going to see that there has been a decrease compared to Q4, compared to Q1. That is to be expected, right? Q4 is the time when we have holidays. So they do see a bigger portion of sales during this quarter. So don't be frightened with that. Net income in fourth quarter was about $7.2 billion. And that is much higher than the $3.3 billion they had a year ago. For the full year, net sales increased about 38% to $386 billion compared to $280 billion a year ago. Right now, we know a lot of growth has been coming because of the whole COVID situation, right? A lot more people are ordering stuff online. They're still not going to stores to pick it up, and they're still seeing that growth impacted. Operating cash flow increased about 72%, and now they're sitting at operating cash flow from operations of $66.1 billion for the trailing 12 months compared to $38 38.5 a year ago. This money is definitely just making cash from its everyday operations, and it's insane how much money this company makes. One thing I do enjoy about Amazon is they talk about every single little thing that they're doing, and their letters are usually pretty long. So today we're going to take a look at some of the highlights. We're not going to look at all of them, just some of them that I thought were pretty interesting. They're doing a lot of things to try to protect the planet, they're calling it. For example, Amazon has become the world's largest corporate purchase of renewable energy. In shopping and entertainment, they talked about Amazon Pharmacy that they just launched. Some other things they talk about are their Amazon devices. Amazon announced that Fire TV has now reached more than 50 million monthly active users around the world. They also talk about Zoox, which is their electric autonomous vehicle that they're working on right now, and they kind of did a first look on that. Amazon also announced Alexa Custom Assistant, which is a new service that lets device makers, automakers, and service providers create custom branded voice assistants. Amazon is continuing to make progress on Project Kuiper, which is a low Earth orbital satellite constellation. So like I mentioned, Amazon is all over, and you can definitely come and take a look at their platform here. Their shareholder letter has a lot of great information and a little things that I don't think we probably would have an hour show if I talk about every single part of them. The one I do find very interested and makes me very happy about my data center companies like AMD, especially NVIDIA. AWS is still seeing crazy growth, and they are expanding a lot of data centers and continue to expand the overall infrastructure footprint around the world. They announced a new infrastructure clouding place in AWS in the Asia Pacific, in AWS Europe, and another one in Asia Pacific, Melbourne regions. And again, this is great because you're going to need a lot of memory for that. You're going to need CPUs, you're going to need GPUs, you're going to need things that NVIDIA provides. They also have new local zones in Boston, Houston, Miami places. Again, these types of local zones need these GPUs, need these CPUs, need this memory. So overall, very, very bullish in the data center world right now. AWS also announced the general availability of Amazon EC2 P4D instances, the next generation of accelerated computing powered by guess who? NVIDIA's A100 Tensor Core GPUs. Unfortunately, I was looking and I don't see any names of AMD or Intel. They also gave us guidance for quarter one. For the first quarter of 2021, net sales are expected to be $100 billion to $106 billion, which is somewhere around 35% year-over-year growth. So they're still expected to continue to see that strong growth in quarter one of 2021. The final thing I wanted to see is the overall revenue breakdown for Amazon. So Amazon right now is in three major segments: the e-commerce in North America, e-commerce international, and the AWS. So in the trailing 12 months, most of the revenue comes from North America. It's about 61%. International makes up the second, about 27%. So most e-commerce platform makes up about 88% of total revenue. The other 12% comes from AWS, and all of them are growing at very strong levels. For example, North America net sales are up 40% compared to the same time last year. Internationals are up 57%, and AWS net sales are up 28% compared to the same time last year. And still very similar to previous quarters, operating income is still pretty much driven by AWS. For this quarter, operating income was about $6.9 billion. Most of it coming from the AWS segment. AWS makes up about 3.6, so more than half of operating income comes from AWS. International, since COVID situation started, it actually became positive. So I hate to say this, but COVID was one of the best things to happen for Amazon, especially internationally. They were negative in this segment since before COVID. When COVID hit, they actually became profitable in the international segment. The North America segment is also profitable, but even adding North America and international operating income does not equal the amount that they make from AWS. So now let's take a quick look at some technicals from Amazon. So Amazon had in the past 2 days has definitely seen a run up, which makes it a bit overextended from its moving average, as we can see. But what I really want to show is Amazon since about July 20th, July of 2020, early July, the stock price has not moved. Sure, it's been very, very volatile, but it's kind of been sitting in this low 3,000 areas, and it's really building up a strong base or support levels, in my opinion here. So I do believe Amazon, for me, is still, even with a bit of a pullback, is still a great time to add on to positions. So maybe this Friday, I put money to work every Thursday or every Friday. Amazon might be another one I will continue to add to my portfolio. So let me know what you guys think about Amazon. Were you guys bullish on Amazon? And what are your thoughts on Google? This is a crazy jump up on Google right now. So take care, guys. Have a good night and see you tomorrow.